In this edition, we'll look at a seminal moment when Wall Street and Washington stacked the deck against the rest of us. Remember, this is the political equivalent of a crime story, a mystery. How is it that our economy stopped working for the broad majority of Americans? How did our political and financial class shift the benefits of the economy to the very top while saddling us with greater debt and tearing new holes in the safety net? In other words, how did politics create a winner-take-all economy? Well, it didn't happen by accident. This was an inside job, politically engineered by Wall Street and Washington, working hand in hand, sticky fingers with sticky fingers, to turn the legend of Robin Hood on its head, giving to the rich and taking from everybody else. It's all on the record. The richest of the rich was Citigroup, at one time the world's largest financial institution. When the 2008 meltdown hit, the bank cut more than 50,000 jobs, and taxpayers shelled out more than $45 billion to save it. So how are Citigroup executives doing these days? Well, nicely, thank you. Last year, its CEO, Vikram Pandit, took home almost $2 million in salary, almost $4 million in deferred stock options that may be worth as much as $6.5 million, and a $16 million retention bonus. There is no clearer example of the collusion between government and finance than the deal that created Citigroup in the first place. At a standing room-only press conference in April 1998, Sandy Weil, head of the investment bank and insurance company Travelers Group, and John Reed, the longtime CEO of the commercial bank Citicorp, announced a gigantic $140 billion merger. Just one problem. The merger flew in the face of this law. You're looking at the Banking Act of 1933, also known as Glass-Steagall. Glass-Steagall was enacted during the Great Depression to prevent investment banks from ever again gambling with people's life savings, as they had before the market crash of 1929. Glass-Steagall protected us against a repeat of that calamity for 70 years. It's a little bitty thing, just 37 pages for the big job it did for us. Glass-Steagall was still in force when Travelers and Citicorp went ahead with their merger. What made them think they could get away with it? Well, they had friends in high places, friends who helped them exploit a loophole, giving them 2 years to get rid of Glass-Steagall. Among those friends, the laissez-faire libertarian chairman of the Federal Reserve, Alan Greenspan, the right-wing Republican senator from Texas, Phil Gramm, who once called Wall Street a holy place and later would become a high priest at the global banking giant UBS, and the Democratic Secretary of the Treasury, Robert Rubin, former co-chair of Goldman Sachs and tireless advocate of taking down Glass-Steagall. In the weeks before its repeal, Rubin left government to join, are you ready for this? Citigroup's board, the very financial giant made possible by Glass-Steagall's elimination. And so it was. The fix was in. The path was cleared all the way to the top.
Sandy called his friend the president last night and invited me to join in on the conversation, and we had a good talk. And so the president was, in fact, told last evening about what was going to happen.
You got that, I'm sure. Wall Street was telling the President of the United States what was going to happen. Within 2 years, Glass-Steagall was deader than a doornail. With the stroke of a pen, President Bill Clinton signed legislation that eliminated its protections and gave Citigroup the green light. John Reed retired from Citigroup a year later after losing out in a power struggle with Sandy Weil. He went on to serve as interim CEO of the New York Stock Exchange and now chairs the board at MIT. As Wall Street collapsed in 2008, Reed watched in disbelief and began to have second thoughts about it all, including the wisdom of repealing Glass-Steagall. You were a key player when Travelers and Citicorp merged. How big was this to you at that time?
It was not that big. It clearly was an important transaction from our point of view, and it was hopefully, it turned out incorrectly, but it was hopefully going to transform sort of the opportunity space in which the bank operated from a business point of view. You know, our customers were saying, hey, we don't want to come to you for loans, they're too expensive. We can sell our paper into the capital markets more cheaply. We can finance ourselves more cheaply.
Your customers being
large companies.
Okay.
And these customers were saying, we want you to intermediate the capital markets. Now, that is the traditional business of what we then called investment banks. And Glass-Steagall had separated out those who were principally engaged, which is a very important phrase, in the capital markets, which were then the investment banks and the brokers and so forth, from the commercial banks.
Glass-Steagall was the act passed during the New Deal back in the 1930s that was designed to put a firewall between the investment firm and the traditional banking firm. So you couldn't take my deposits or grandma's deposit and take risk with it, right?
Well, that, and even more importantly, or equally importantly, since the FDIC came into existence at approximately a similar time, where the government was guaranteeing deposits so that people didn't lose, if a bank got into trouble, people didn't lose their lifetime savings. My father lost his lifetime savings during the Depression, and it was quite a family event. And if he had ever known I worked in a bank, he would have died yet again. But not only did they want to keep the banks from the business for reasons of not risking the money, they didn't want them to use the guarantee that the government provided for those deposits to leverage their position. Because, you know, if you have a deposit base that's guaranteed by the government, it sure puts you at a great advantage in terms of going into the market and playing around.
The government's going to pick up your losses, right?
Yeah, and you don't have a funding problem.
That was what
because
the FBI,
you have guaranteed deposits.
That was the Federal Deposit Insurance Corporation, was designed to protect my deposit in your bank.
That's right. And they wanted to make sure that it was used for that purpose and not as a basis for doing other things in the capital markets.
So this is why the financial community wanted to repeal or eliminate the Glass-Steagall Act. They wanted to get rid of this firewall?
Yes, and the reason was our customers increasingly said, look, we can't use you banks for finance because there are opportunities in the capital market that are much cheaper. And if you can't help us go there, then we're going to go to the investment banks. And so all of a sudden we saw our customers migrating out towards the investment banking community to do the business that we would have preferred to have done. So from Citibank's point of view, our point of view, this merger gave us access to the capital markets. And so we were in a position to offer our customers the services that they wanted.
They plan to attract new customers with one-stop shopping: stocks, bonds, property and life insurance, and banking. Federal regulators must approve the deal. Most banks are now prohibited from selling stocks and insurance.
Thank you very much.
When Sandy approached me on the merger, I knew that it was right on the forefront of the legal thing. But there's a technicality. Citibank could not have bought Travelers because that was out and out illegal. Travelers, on the other hand, could buy Citi. Because they were buying a bank and they had 2 years in which to correct for the deviation from the law. And what we basically were told was, if you all want to do this, within the 2 years, we'll get the law changed.
Because if in that 2-year period, as I understand it, Glass-Steagall had not been changed, this merger, which had already taken place, would have been illegal.
We would have had to take it apart, and we took steps to make sure that was possible.
But you got the blessing in this 2-year period of President Clinton, of the Fed.
We had that blessing prior to. In other words,
what did they assured you that this
yes.
Glass-Steagall would be?
Yes. In other words, I went with Sandy to call on Chairman Greenspan. We told him we were contemplating this merger, but that it required that the Fed would be prepared to grant us permission, and we were assured that they would. We went and saw the chairman of the House Banking Committee, the chairman of the Senate Banking Committee, and we said we're talking about this merger, but it could not take place if we were not assured that it would be approved at the congressional level. We talked to the Secretary of the Treasury. I don't recall.
Robert Rubin, he was the Secretary of the
Yeah,
Treasury.
we would have spoken to him, I'm sure. And had Bob Rubin said, no, the Treasury feels this is wrong, we would have been careful, because obviously the Treasury recommends to the President on an issue of this sort. And there was no argument. No one said, well, we'll have to think about it. And so a consensus built up. I don't think it started in the Fed. I would guess it started in the industry. It certainly got into the Congress.
By eliminating the Glass-Steagall restrictions, we free our financial services industry to maintain its place as the world leader. We dominate the world's financial market, and we've done it with one hand tied behind us because we have the greatest economic system in the history of the world. But we can untie that hand that we have had tied behind us, and we do it in this bill by repealing Glass-Steagall.
Lawmakers inevitably learn as lobbyists tell them things. It's sort of like a doctor being sold new medicines. They can't stay on the forefront of the pharmaceutical technology. They rely on being educated to some extent.
This bill is vital for the future of our country. If we didn't pass this bill, we could find London or Frankfurt, or years down the road, Shanghai becoming the financial capital of the world.
There was no one in the press who said, oh, no, that's wrong. There was a celebration, and the industry, including myself, didn't recognize the danger.
The danger being?
That we could make a mistake that would then be transmitted in a much more drastic way throughout the system.
Which happened later.
Which happened, yeah. I mean, if you had asked me under oath what probability I would have given that you would have gotten the whole group of Wall Street participants to get it wrong, so to speak, I would have said 0.
We are, with this piece of legislation, moving towards greater risk. We are almost certainly moving towards substantial new concentration and mergers in the financial services industry. That is almost certainly not in the interest of consumers. And
a handful of politicians tried to sound the alarm. Among them was Senator Byron Dorgan of North Dakota.
What does it mean if we have all of this concentration and merger activity? Well, the bigger they are, the less likely this government can allow them to fail.
Were you aware of the few senators who raised real concerns about removing Glass-Steagall, about what would happen?
No one that I'm aware of saw it clearly. You point out to some senators and congressmen who did, but somehow we described them as being peripheral. And I simply said they're wrong. Turned out they weren't.
I think we will, in 10 years' time, look back and say we should not have done that because we forgot the lessons of the past.
Senator Dorgan predicted disaster, and disaster is what we got in 2008.
Yeah, no, and disaster, it wasn't solely Glass-Steagall, because much of the disaster of 2008 would have occurred independently of it, I believe, but certainly the propagation of the problem throughout the economy was greatly aided by the absence of Glass-Steagall. We would have hit the iceberg anyway, I believe, but the ship would have had compartments which would have been flooded, and question is, would the whole ship have gone down? Because had it been compartmentalized, we still would have had a disaster. It still would have involved very important institutions, but it might not have spread throughout the whole ship. That's the real issue.
What do you think they saw that Wall Street didn't see?
They simply didn't participate in the exuberance. But I do think that, this setting up the deck of cards so that we could produce what we currently are trying to withdraw from turns out to have been something that the word disaster is maybe not strong enough.
Well, some people now say the deck was stacked, that the game was rigged against the broad interest of the public.
No, I definitely agree, and I mean the proof is there. It doesn't take a genius to figure out that we'd been wrong.
But it takes somebody principled to admit that I was wrong?
No, it's not something you like to end your career with.